What's up, everybody? Hope this finds you doing well. This is Danelle here at Networkchain. Today, we're going to talk about the macroeconomic environment. We think it's very important to have an understanding of what's going on from the macro perspective when we look at investing, particularly in the cryptocurrency market, as well as other emerging technologies and the equity market. Let's go ahead and start with the cryptocurrency market update. You can see Bitcoin is currently trading at just above $85,000. It's about flat, up 0.58% over the past 7 days. Ethereum still hasn't gotten back up to that $2,000 range in a while. It's currently trading at around $1,600. It's also pretty much flat over the past week. We can see that XRP is down 3%. Solana is actually up about 7% over the last 7 days. You see Dogecoin still hanging in there in the top 10. The biggest meme coin of them all at a $23 billion market cap. It's actually down 3.88% over the past week. Then you have Tron and Cardano rounding out the top 10, and that's down a little over 2%, trading at 63 cents. So if we look a little bit closer at the Bitcoin chart, we're looking at the weekly candle chart. You can see that Bitcoin is now still in this range, basically between 75, 76, all the way up to around 87, 88,000. Now you can see that it's really starting to look like it's developing this accumulation pattern similar to what we had most of 2024. A lot of people were kind of lulled to sleep with Bitcoin's trading range over the several months, really most of the year of 2024. But then we saw this huge spike up, and now we're kind of come down a little. We've come down, and now we're starting to trading in this range. And you can see we've been trading in this range for about a month and a half, nearly 2 months now. So it remains to be seen if we're going to see any movement anytime soon. I think we need to see what's going to happen from the macro, and we'll talk about that a little bit more in a moment. But we talk about it because it's very important, because it definitely affects markets and how much people are able to invest, and if they're unable to have the money to invest in risk on assets. And obviously Bitcoin and cryptocurrencies are some of the highest risk on assets in these markets right now. Even though Bitcoin is showing a lot more stability, or has been holding up well against some of the major indices when it comes to what's been happening with tariff announcements and other global factors that can affect what's going on in the investment market. It's actually held up pretty well when it comes to its performance against S&P 500, the NASDAQ, Dow, gold. Even though gold has also been doing extremely well, it's actually been reaching all-time highs, but Bitcoin has definitely been holding up over these last couple of months, and really over these last several weeks. So we can see that Charles Schwab, which is now nearly a $10 trillion asset manager, their CEO in their recent earnings call said that they are going to be looking to allow for spot Bitcoin trading. So now they offer the Bitcoin ETFs on their trading platform and for their clients, but they are also looking into offering trading of actual spot Bitcoin. So if you're interested in holding pure Bitcoin, you can now have an opportunity to trade it on Charles Schwab. And it looks like they're also going to be considering other crypto as well. And it looks like they're eyeing it, as you see here in this report, for an April 2026 launch, so about a year from now. So this is a big announcement, because Schwab is definitely one of the largest asset managers in the world, and they definitely manage a lot of funds, particularly 401ks and other retirement accounts in the United States. And so this is big news when you see that another larger institution, especially one that is known for trading for retirement funds and offering other traditional financial services, is that they're actually looking to expand to crypto. So it's just another indication of the validation that the crypto market is receiving from these more traditional financial institutions, and we're starting to see that the demand is continuing to grow. So that's why, when we go back and see what Bitcoin is doing over these last several weeks and the last several months, we're seeing that more demand is coming into the asset. And because it is a finite supply, it cannot be printed out of the air. We know that there's an algorithm and there's a code that is being followed by the miners, and only 21 million will ever be in circulation. So people are understanding the general principles of supply and demand, and as more demand is coming into a finite supply, that most likely is going to see a continued increase in price over time. So obviously that still is going to continue to develop, but it definitely is looking like Bitcoin has a bright future. We're here, and we'll probably actually go through this presentation, or at least a portion of this presentation, from Bitwise. They have a Bitcoin ETF, and they come out with a quarterly review of the crypto market, and they actually have some really good information in there, so we'll probably go over it at some point in the next couple of weeks. Maybe even next week we'll do a video on it. But one of the things that we're seeing here, and one of the things that we also know is one of the factors that traders and investors look at, are patterns. They look to see what's happening when they're trying to decide whether they're going to invest in something, when they're going to invest in something. You look at patterns not only from a fundamental perspective, but also from a charting perspective. And when you hear about patterns when it comes to Bitcoin, one of the patterns that we've seen since its existence is the 4-year cycle, because the 4-year cycle basically coincides with when the Bitcoin halving happens, and that's basically when the mining rewards are cut in half, and it basically happens every 4 years. So we've been tracking this since the beginning of Bitcoin, and so you can see here that the first cycle, basically when they first started the halving, was from 2011 going to 2014, and you can see that the pattern is that every 4 years we'll have 3 years of upward trends in the price, and then of the 4th year we see a downtrend. And so right now we're not staying on track of the trend, but we're still obviously fairly early in the year. We're just now in the second quarter of 2025. And these results are just a reflection of the first quarter, so it doesn't include April. But right now, Bitcoin is down, but we still have several months to go, obviously, before we can find out whether or not Bitcoin will actually finish out the year in the green, as it has done over the last 3-4 year cycles. So just to switch gears for a moment, one of the things that are of concern for a lot of folks, and why we may see a potential stray from the traditional 4-year cycle, could potentially be because of the macroeconomic environment and what we're seeing, not only with tariffs, but a potential recession that could be on the way. We've been hearing that a lot lately. It still remains to be seen if that's going to be the case, but if that's the case, if we do have a recession, that's going to affect people's ability to be able to invest. That's going to affect companies who are going to be producing products, and they're going to have a slowdown because consumers are not buying or using their products and using their services. So we see here the total debt balance is going and has reached all-time highs. When you look at housing debt, this is going to the year end of 2024. We can see that mortgage balances are the highest they have ever been, at over $12 trillion. You can also see non-housing debt, which includes credit cards, also at its highest level ever. And so you can see here that mortgage balances shown on consumer credit reports grew by 11 billion during the 4th quarter of 2024, and that totaled 12.6 trillion at the end of December. When we look at credit card balances, which now total 1.21 trillion outstanding, grew by 45 billion during the 4th quarter and are 4% above the level a year ago. So it's a trend upwards, and this is not a great trend, because that's showing that consumers, in order to make ends meet, has to go to debt to be able to pay for bills or pay for other outstanding debts that they may have. So that's also an indication of what could be happening from the macroeconomic environment. So if we look a little bit closer, you can see this is a chart showing the balances for credit cards and other revolving plans. And you can see it's at all-time highs here, and this actually takes you to the end of March 2025, actually going into April. And you can see it continues to go up and to the right. And that's not actually a very good sign. Another thing that we're showing here is the median sales price of homes. And so it's getting more and more expensive to be able to afford a home. So for middle class families, that was part of the so-called American dream, was being able to buy and own a home. But we're seeing that the housing market is definitely starting to slow, but these medium sales prices are still on the uptick. And a lot of people enjoy getting into investing in real estate because you can see that over time, investment properties, real estate goes up in price. Obviously, it depends on location and a bunch of other factors, but we're looking at averages here. We're looking at the median sales prices here in this particular chart, and you can see that it is above 400,000, never reaching that before 2020. So we look here at the total assets by market cap. You can see that Bitcoin is still in the top 10, currently trading at around $1.7 trillion. Gold at all-time highs at $22 trillion. So Bitcoin, known as digital gold, if it ever were to reach gold's current market cap, that would be about a 12 plus X from here. But you can see that these charts over the last 30 days, which has definitely been very volatile in some of the other markets, you can see that Bitcoin has stayed fairly flat, and a lot of the other assets and stocks like Apple, Microsoft, Nvidia have been down over the last 30 days. Gold has really been the one that has outperformed over the past month. So we'll definitely keep you posted on what's been going on, as this is definitely a fluid news environment that we're in, particularly when it comes to what's going on. So we will definitely keep you posted. Of course, check us out not only here on YouTube, but on X as well as IG. Thank you so much for watching. We definitely look forward to linking up with you soon on the network chain. In the meantime, take care. Bye-bye.